Good morning. Welcome to CurrencyChange Daily Markets Update on Monday, the 7th of October 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, local solution for your international payments when you send money abroad. You can open for free an account with us with no obligation to exchange now on www.currencychange.com by clicking on the right-hand side red button, which says Open an Account, to benefit from a most competitive exchange rate when you send your money abroad. Little progress in the last couple of days from the US suggests US dollar weakness. US House Speaker Boehner said US is on path to default if President Obama fails to negotiate, with major data releases dependent on the resolution of this US government shutdown. The market focus would only be on news from the US political situation, which is unusual. Although the FOMC minutes, which will be released on Wednesday, will be watched closely for further clues behind the Fed's decision to not taper asset purchases at the last September meeting. Anyone who remembers the collapse of Lehman Brothers Holding in October 2008, little more than 5 years ago, knows what a global financial disaster is. A US government default just weeks away, if Congress fails to raise the debt ceiling, as it now threatens to do, will be an economic calamity like none the world has ever seen if it would happen. In US, the market has so far given to the US authorities the benefit of the doubt, but as we enter the second week of negotiation, we clearly think market patience will start to wear thin. There has been little indication of much progress on talks over the weekend, suggesting US dollar weakness looks set to resume. The longer the deadlock continues, the more uneasy the market will feel, especially as we approach the deadline to raise the debt ceiling, which is the 17th of October. In Europe, the euro has really dropped out of the market spotlight, with a general trend for the single currency remaining slow progress upwards. It is now closest to the highest level since February against the US dollar, and though the economic data from the bloc, Eurozone bloc remains mixed, prospects for growth over the course of the next year are the brightest for a long time we've ever seen. This week is extremely light for data from Europe. We'll have only industrial production numbers over the course of the week, the most significant release that we will see. In UK, sterling gains last week helped by safe haven demand were pared back on Friday following the failure to break through the 162.50-60 area, which is a key resistance level on the sterling dollar. However, with no resolution from the US over the weekend, we expect US dollar weakness against sterling to resume. There is little case for sterling to weaken, especially following the strong PMI indicators last week. The Bank of England MPC meets this week on Thursday, but is unlikely to reveal anything really new. UK industrial production and net trade figures will be released on Wednesday and should at the margin add to the upside risks to Q3 GDP. Based on the recent PMIs, Q3 GDP is shaping up to rise by close to 1%. In terms of live exchange rate, we're currently live at 160.70, lower than Friday. Sterling euro, 180.30, lower. Euro dollar, 135.80, slightly lower. Sterling Australian dollar, 170.76. Sterling New Zealand dollar, 194 unchanged. For the economic agenda, really small. We'll have today at UK time at 10 o'clock the Euro GDP Q2 expected at 0.3 versus 0.3. If you require further information, please do visit now CurrencyChange.com or contact us on +44 0207 373 2686. Have a great week.